and welcome everybody to today's demonstration of the Meridian VAT add-ons tax code module. Just to give you a quick overview as to what the Meridian VAT add-on actually is, it's a VAT determination solution for SAP. It's a modular solution, and the module we're going to discuss today and give you an overview and demonstration of is the tax code module. As you're probably aware, within standard SAP, organizations face a challenge when VAT rates change within a country. What's required is that their existing tax code for that rate is expired and a new tax code is created within the system. What this means for organizations who are maintaining a large number of VAT registration numbers and have been using their SAP platform for a good amount of time is that as the number of tax codes that can be created in the system is finite, they can find themselves in the position where they are actually running out of tax codes within the system. What the Meridian VAT add-on tax code module functionality allows them to do is maintain their existing tax codes in the system and drive the VAT rate determination in a condition record that sits behind their existing tax code. So there's no longer a need to create new tax codes in the system every time there's a VAT rate change. What do I mean by that? So take, for example, the recent VAT rate changes in Germany where the rates for standard rated changed from 16 to 19%. If, for example, an organization had two tax codes in the system, D1 to reflect standard rated input tax and DE to reflect standard rated intra-community acquisition taxes. When these rates changed from 16 to 19%, organizations would need to expire and stop using these tax codes and create two new tax codes in the system to reflect the new rates. With the Meridian VAT add-ons integrated validity period functionality, there's no longer a need to create these new tax codes each time a VAT rate changes. So in the example we were discussing, you could continue using the tax codes D1 and DE when the rate changes from 16 to 19%. That's because the rate is no longer maintained in FTXP. It's now maintained in a condition record that sits behind your existing tax code. So you would simply expire the old condition record and create a new condition record with your new VAT rate of 19%. To show you how that looks in the system, if we take this AP scenario where we have a German company code buying standard rated goods from a Austrian vendor, what we're expecting to see is 16% acquisition taxes in Germany. Because let's say, for example, this invoice was received pre-2020 when the VAT rate was 16%. I'll show you how that looks now in the system. The tax code that we're expecting to use is tax code DE. If we go to FTXP with country DE and tax code DE for intra-community acquisitions, we can see now that the rate is no longer stored within FTXP. It's now stored on a condition type, on a condition record that sits behind the condition types for acquisition taxes. So within our system, we're using ZACC and ZACD to reflect acquisition taxes. If I check the FE13 condition record for that condition type and that tax code, in December 2020, we can see that the VAT rate applied to that condition type was 16%. However, if we check today's condition record, so the condition record that's valid today, for tax code DE, we can see that it reflects the new rate of 19%. So I'll just show you in Miro how that flow would appear. So we can put in our rate. We can put in, so in our example, we want to say the vendor sent his invoice with an invoice date of, let's say, the 12th. We can put in our purchase order number. We can see the Meridian purchasing module being triggered to determine the relevant tax code, but that's not what we're discussing today. We can see that the tax date field has been populated by default with the invoice date. Now, this is based on the customizing settings in your system as to whether by default the invoice date or the posting date is taken as the tax point date. In our system, it's set as the invoice date, so we can see the tax date is automatically populated with the 1st of the 12th, 2020. And if we simulate this transaction, based on the condition records that we've maintained, we can see 16% VAT has been applied. However, let's say, for example, the invoice had an invoice date of the 1st of February 2021 when the VAT rate had changed to 19%. All we would need to do is change the tax point date to be the 1st of February as well. And if we simulate that transaction, we can see now, based on the condition record that was valid in February and is currently valid today, that the VAT rate has been updated in the transaction to 19%. And this all sits behind the same tax code DE. So there's no longer a need to maintain two different tax codes to reflect those two different rates. Just to show you how that would look on a sales transaction. So for purchasing, Meridian has a MIRVAT tax date field that drives the determination of the VAT rate. However, for sales, it's all driven via the service render date. So in this example, we have a German entity, again, selling towards a German customer. If we create the order, so again, it's just a standard order for our German sales organization. We're going to sell towards a German customer. One piece of standard rated goods coming from our German plant. We can see that as the pricing date and service render date is today's date, that the MWST rate on the condition record is 19%. However, if we were to change the service render date to a date, let's say in December 2020, SAP recognizes that the taxes need to be redetermined. And we can see now in the MWST condition type that the new rate of 16% has been redetermined correctly in this scenario. So going forward, there would no longer be a need every time there's a VAT rate change to create new tax codes in the system, whether it be for sales via the SD functionality, or for purchasing solutions, or indeed even invoices posted directly into finance. These transactions, the rate behind these transactions can all now be driven via condition records that sit behind your existing tax codes. So there's no longer a need to create new tax codes in the system each time there's a VAT rate change.